Good afternoon, everyone. Pleasure to be with you all. I would say this is the biggest panel discussion I've done till date, not just by the scale, but necessarily in terms of the number of panel members that we have today here with us. But that also brings us the opportunity of hearing diverse inputs from various speakers, ranging from industry experts to bankers to startups to investors and the subsidiary of the regulator as well. So the intent is more to unlock this topic of how to scale fintech innovation in a regulated environment. I think goes without saying that financial services across the world have been regulated by either the central bank or a regulator. Primarily think of it as, if I may use the analogy, uh, what would uh, what would be the function of a cylinder without a regulator? I think that is the role of the regulator in ensuring that innovation is taking place at a pace which is manageable and that does not cause any disruption in the financial stability of the financial services and the financial system of the country. Given this context, India is the third largest fintech ecosystem in the world. We have nearly 20 plus unicorns and 30 plus unicorns. If not, the most number of future unicorns are likely to be from the fintech sector. So there's clearly something right that we are doing, and there is an opportunity that we can address in terms of what could be done better, in how regulators, banks, financial institutions, and startups, as well as the investors, can come together and really scale this sector. So maybe on that note, I would like to welcome all the panelists to this session, and maybe would want to get started quickly without further ado. The first question I would ask to, I would say, Pramod, in terms of how startups, just trying to understand how startups are keeping pace, or how startups are, able to manage the regulatory expectations. And then we'll go to the other questions to the panel as well. Yeah.
Sure, thank you so much. In the first space, I think everything actually starts with having the right mindset. So, as a startup, what we have to actually consider is the fact that the regulators are doing everything in interest of the ecosystem. Because if we are not disciplined in terms of anything and everything that we are doing around the business, then the entire ecosystem and the success of the ecosystem actually goes on a toss. So we at Zrika also have the similar mindset in terms of being aligned with what the regulators are expecting from us. So, for example, the compliance, for example, is one of the most critical element of our entire product life cycle as well. We have ensured that every talent that actually works with us is quite aware about the regulatory compliance and what the regulators are expecting from startups like us. And we have ensured that everything is in sync with whatever we are developing. Though as a startup, we are very aspirational in moving very fast and building something which is disruptive. But at the same time, we also understand that there are certain expectations that the regulators have in terms of compliance from us. So having the right mindset and building that kind of culture internally will always align you to be in sync with regulators, but at the same time also grows businesses at scale.
Thanks, Pramod. While we are on the topic of startups, would like to quickly get Joseph's perspective from an investor's lens as to how you see the dynamics between the startups and the regulator playing out.
Thanks, Aakarsh. Great to be here. And a very important topic, right? I totally agree. I often joke that the innovation ecosystem in Bangalore in fintech is physically and philosophically distant from the regulator, right? Because at the cutting edge of innovation, very often you have to sort of look at the customer first, look at technology first, and regulator will always be catching up. Right? Regulator will never. It's unfair to expect that the regulator will be at the forefront. Therefore, I think everywhere in the world, not just in India, I think it's a very tricky relationship where you have to encourage a degree of momentum for the startup to sort of build and innovate, but at the same time ensure that things around customer security, things around sort of mis-selling and all of those things are actually properly sort of managed. So I think it's a relationship that's tricky to navigate everywhere in the world. That's true in India too. But in India, there's a additional degree of complexity, right? Because we have regulators and we also have a large number of DPIs, right? And the way we have set up the DPIs don't allow for monetization very often. So there is a risk that India could evolve into a market where DPIs have taken away revenue potential and the regulators taken away the ability to maximize market share. So you could end up with a low market share, low revenue sort of structure for our industry, which will disincentivize innovation and fintechs. So I think it's a hard thing for the regulator to really think through and ensure that if we err on safety alone, then that's the market structure we'll end up with, which won't be ideal for innovation. At the same time, the startup needs to realize that, for example, my favorite one, and maybe we'll address this later, is stablecoin payments is now everywhere in the world one of the sort of most interesting frontier of innovation and technology, right? In financial services. But in India, you simply can't do it. And if you do it, you're taking high regulatory risk. So I think both these things have to be managed. It is a tricky relationship. It will always be a tricky relationship. But initiatives like the RBI Innovation Hub, right, signals the intent of the regulator at least to engage and sort of build a relationship with the fintechs, and that itself is a good signal and it's valuable.
Thanks, Joseph. So while we are on the topic of how RBI as a regulator has been trying to, if I may use the word, keep pace with the fintech innovation around, RBI set up the fintech department recently to specifically work and understand the needs of the fintech sector. Following the fintech department, the Reserve Bank Innovation Hub was also set up, and within the hub, we have set up an initiative called the Fintech and Startups Initiative, also known as FAST, with the intent of accelerating the journey of fintechs from point A to point B. And also, there are several other initiatives of the RBI that I will just mention very briefly, but can come up with later in the conversation. One, of course, is the regulatory sandbox that has been set up to essentially, if regulatory, I would say, any of the clauses is hindering, regulation is hindering innovation, it can be tested out in a sandbox and proven and showcased to the regulator for further, action in terms of taking the innovation forward. There is also an initiative by the RBI along with RBIH where it's called Finteract, where on a monthly basis, RBI actually spends time talking to fintechs to understand what are some of the challenges they're facing, what are the opportunities they see, what are the white spaces, and how is it that we as a regulator can enable your journey. And aside of that, more recently, the SRO framework has been put in place. Self-regulatory organizations also can represent the voice of the fintechs and ensure that these regulations are handled effectively and implemented within their respective setups as well. So there are more such initiatives that have been created from a regulatory standpoint. But now I would want to maybe switch gears and try and understand from some perspectives, on the ground perspectives from the people who are actually doing this. So my next question is to the bankers who are at a very interesting, transition point in terms of working with the regulator as well as the end customers. So given that perspective, maybe my question is to Ajay in terms of how banks are keeping pace with the regulators and also innovating at scale. So Ajay, maybe your thoughts on this?
Let me rephrase that question. I think rather than asking whether banks and fintechs are able to keep pace with the regulatory innovation, I would actually put it the other way around. Are we able to keep up at the pace of innovation that the regulator is doing? I think that's the question probably we need to ask. And the reason I say that question is because if you look at today the the whole space that India is in, right, or the developments that we made in the whole digital payment infrastructure or digital public infrastructure or even the payment infrastructure, none of it would have happened if the government of India and the Reserve Bank of India did not have the foresight to create, to first visualize and then create and then execute the whole DPI as we call it, right? And it is by far, I think, the most successful DPI ever done anywhere globally. Started with Aadhaar, but then, which is the identity layer, and then went on to the payment layer, and then has gone to the data layer, right? So very clinically, it has addressed, all the aspects which are required for innovation, and which has all been built at population scale. So I think that really shows the progressive nature of, the government's strategy and execution, and of course, very ably supported by, the equally progressive regulator. You also touched upon, few things, at your end, which is the steps which RBI has taken as probably one of the finest regulators globally in terms of their understanding of, innovation, and also applying it so that India as a whole is benefited and not a particular strata or segment which is there, right? And hence, a lot of times fintechs feel that, it is overarching or whatever. But I think we have to first internalize and understand that the regulations are meant for population at large and not for a particular segment, and not always keeping customer ease, in mind, right? It was also customer security which comes first. So all these steps by RBI you already articulated, so I don't want to repeat it, whether it is setup of a fintech department or the innovation hub, the regulatory sandboxes, APIs, which have been cleared by RBI. So I think the regulator has done more than enough in terms of, fostering innovation, and of course setting the stage for people to come and innovate on top of the infrastructure which has been created. The other side, of course, a lot has been done. India has clearly achieved a lot when it comes to innovation, especially on the fintech side. I think we have been global leaders in terms of whether it is payments or some of the other initiatives that we are working on. So we have Zerodha here. I think completely has changed the way people invest. And all of these have been done at phenomenal scale. Banks, you specifically alluded to. I would again, actually say here that the whole fintech growth that we are seeing here, or the explosion that we are seeing here, has happened only because three critical parts of the ecosystem have come together here. One is the government and the regulator. Second is the banks, who have provided the trust factor and the rails on basis of which the fintechs have been able to innovate. And the third, of course, is the fintechs itself, who have really innovated and created a lot of solutions on top of that. And last but not the least, I think none of it would have succeeded if the most important, which is the consumer, whether it is individuals or businesses in India, would have not adopted the whole digital and become digital native. If they had not done that, then I think all of this really would have not existed, right? So I think kudos to India as a country and all these ecosystems that we are speaking about. All of them have worked in tandem, not trying to outpace each other, but I think as a tandem, we've created a success story, which is, I think, what India is now famous for.
Thanks, Ajay. That's a very balanced perspective, I must say, keeping all the players, taking all the players into account. Just extending that question to Shibu from an implementation perspective. How have banks been able to collaborate with fintechs, also keeping in mind the broader regulations and the consumer experience at the core? Someone who's at the intersection of all these three, how have you been able to keep pace with the innovation?
I would like to clarify this point, or with some few real-world examples. Before I start, one word of caution: do not take it as a criticism, because this is something which we have faced. I am a former CISO, so all this, the fintech collaborations, ultimately, one way or other, they land up in front of a CISO for cyber security clearances. So I've seen and faced quite a lot of such issues where banks and fintechs, the situation where banks and fintechs were supposed to collaborate, or are collaborating. One issue, for example, one railroad case which we faced was basically we tied up with a fintech organization for a cybersecurity solution and Make in India initiative. The issues which we saw there was basically, for example, that was on endpoints. The agents were rolled out across endpoints, and every Windows update, the agent stops working. Purely, it is again more of a quality control issue. They had challenges in performance and scale up. Now, then the point here is, what do we do about it to help them out? I mean, how do you set up simulation labs which would help them to overcome such barriers? In number two, there are good stories also where we had fintechs who came to us, we onboarded them, and they passed all our checks with flying colors, and we were with limited that we were able to onboard and go live. So that is because that particular those set of fintechs were able to do their homework well. They understood what was required in banks. As you all know, we are highly regulated entities, and we are very clear working within their frameworks. Unfortunately, we are unable to dilute or reduce them in any way because we have a regulator on top of us. We undergo audits, and within this framework, we have also to support the innovation which is carried out by the fintechs. So what we can do here is one suggestion I have on this topic is we have a Ministry of Electronics MeitY. They certify the cloud security service providers. Similarly, certain certifies auditors. So yes, although SRO is a first step in that direction, I would go one step ahead and ask for some sort of certification body which would help to bridge the trust and the technology gap. There is, to be frank, there is a certain element of trust deficit here. That has to be acknowledged and agreed. Understood basically, because fintechs have their own challenges. When they come to us banks, there will be some gaps somewhere. Some of the gaps we see are in cybersecurity. Some of them, when the solution undergoes audit, for example, we see gaps there. And of course, some of them, as I mentioned earlier, in performance and scale-ups. How do you address this? All to extent can be addressed by a certifying body, which would improve the trust, increase the trust between banks and fintechs. For example, we are trusting fintechs with customer data or PIE data. After taking consent from the customer, we are passing on this data to them for processing. Now, if there is an issue, the bank is answerable for that because bank has passed on that data. But then without data, they can't do their job, they can't extend their service. So how do we ensure this trust? Or in case that fintech further subcontracts this, how do you ensure the entire supply chain or ecosystem is trustworthy? These are some of the thoughts which are in front of us, which are issues in front of us, which we need to, as a team, we need to address them. And similarly, we have, quality control, cybersecurity, as I mentioned earlier. Along with that, sometimes we see they also struggle to go to the market. Mentoring for them is sometimes a challenge. For example, I had a fintech who gave a good solution to us, but he wanted to give it to the other banks. But he has to reach out to other banks. He has to go out. He's working in some particular town or particular city. He doesn't have the marketing muscle to reach out to the other cities. What do we do about that? How do we help them? These are, I'm sorry, throwing out some questions in front of you, but this is something for a food for thought we need to deliberate upon.
Thanks, Shibu. So just want to add here, we've worked with fintechs on one side and banks on the other, and of course regulator in between. What we learned was fintechs are very high on what they call as an innovation quotient, and banks are very high on the regulation quotient, and for obvious reasons. And we've seen, as you rightly said, trust and technology deficit at all levels when it comes to adopting some of these solutions, partnering with fintechs. And given this kind of a challenge, RBIH, the kind of model that we adopted was to co-opt banks, incubators, investors, and fintechs together in the format of a program where a lot of this trust gap is being bridged. As a matter of fact, we even partnered with Yes Bank for an acceleration program called Frictionless Finance Accelerator, where we brought in startups. So the format of our initiatives is like there's RBIH that brings in the fintech domain expertise, and the incubator does the business capacity building for these startups, and the bank, commits to do some POCs or pilots with these startups in a sandboxed environment. So in this process, we've seen that a lot of the gaps are bridged, and we also connect them to investors through some of the demo days. So some initiatives, steps are being taken, but there is a long way to go in terms of establishing this trust with various fintechs. So taking a segue from this into some of the startups.
Aakarsh, if I may just take a minute here. It calls for, I think, the right level of maturity and acceptance, for people to co-create solutions, fully knowing that innovation cannot happen doing regulatory arbitrage. If someone is innovating with regulatory arbitrage, I am sorry, but that is not innovation. So the whole point of innovation is how do you innovate in a given environment which is conducive for execution at large. And there are enough and more examples, we ourselves have been, when UPI was launched, for example, right? We partnered or innovated along with PhonePe. They did the front end, we were at the back end. I think the rest is history, right? Today, you see what UPI has done, you see the kind of market share which has been built. So I think it requires the right level of maturity and working in partnership in tandem, where the bank is able to mentor and coach the startup or the fintech in terms of what or how they need to do it. And of course, blend the innovation, what is allowed and not allowed. That's really what the magic is.
You're true. I think we are done with one or few, but so large that how do you reach out to a larger audience?
Okay. So on that note, actually, you raised a pertinent point in terms of how startups have to innovate within the regulatory environment that persists. And, to be able to successfully do that, there's no going away from the fact that regulation is going to be around when it comes to dealing with people's money. So given this context, I'm keen to understand from the view of some of the consumer facing startups, some of them who have apps. We have Zerodha, we have BHIM, of course, Revolut as well. So from the perspective of Zerodha, I want to understand how are you continuing to innovate whilst keeping compliance and maintaining customer trust?
Hey, thanks. When it comes to a bunch of things about dealing in investments, money, making sure you're having the investors who trade through a platform do things the right way as far as possible, can't be hand-holding, can't be spoon-feeding, but maybe can make sure that we don't sell the wrong products to somebody who doesn't really need it or want it or should have it. Certain things even within the regulatory framework are largely philosophy-driven decisions that we've undertaken. I'll give you one example about how we, through the customer app that we have, end up taking permissions about the different aspects that are available on a mobile phone, be it an Android device or an iOS device. And anything that will not be required for you to run the app on your phone, we're not taking permissions for. Across the board, there are permissions taken for SMSs, emails, camera, a bunch of things, but it might not be always needed. So as per need, we make that switch happen. And in addition to that, in addition to the technical nuances that affect you as an investor or just as a user of an app, there are certain things which deal with how behavior functions. So maybe in the stock markets, maybe while investing, the right behavior is sometimes to not do anything at all. And if you keep getting push notifications asking you to act on something, asking you to buy something or sell something, it might be good for the stockbroker, but might not always be good for you. And there are empirical studies around this as well. So there are brokerages across the world, one of which did a study on some of the portfolios that they had. And they figured that few of these portfolios which did not have any activity seemed to do really well compared to the portfolios that had a lot of activity. And then they went out to find who these portfolios who did not have any activity belonged to. A lot of these people were dead. Essentially, what that was saying was if you don't act on your investments, a lot of times that could be the best decision that you make. That's one of the things we've also done. We don't push you to sell a stock or buy a stock. We don't encourage transactions. Never send a push notifications until it's a regulatory mandate for us to, maybe to inform you about your trade, maybe to inform you about something that's coming up that's impacting your account, a KYC, a re-KYC. But apart from that, nothing at all.
Thanks, Mohit. So, I think just extending that conversation, Gaurav, if you would like to comment from BHIM's perspective, how you've been able to do it.
Yeah. So I think recently we launched BHIM 3.0. BHIM is basically the first payment app launched by Honorable Prime Minister. So BHIM is, when we launched this BHIM 3.0, it was based on the three principles which we followed. Is like inclusivity. The second one is trust. And the third one is basically the user or consumer experience at scale. Coming back to the trust tenet, I think we were fully focused, like whenever a consumer gets onboarded into our platform, whatever kind of a data he is sharing, right? Be it like PII, PCI DSS, or whenever, whatever way they are sharing, be it at the front end app, it is being shared, or front end app is sharing it with the back end, whenever it goes to PSPs, to UPI switch, whether the system is, the systems, be it like, in the UPI system, there are multiple components into it. So if any of the system gets compromised, the data of the consumer should not be compromised. This was our core principle, right? In order to gain the trust of user to our platform. So that's what was the fundamental aspect to it. We stitched to it, and I do understand that when you are transforming and you want to you are running as a startup, you want to reach to a scale where you want to prove yourself. Definitely these the compliances or the regulations, when it comes, we might hinder into it, but I strongly believe it is required, as rightly mentioned before. Innovation without a compliance is not an innovation. So I strongly believe the regulator should come forward, be it like RBI or SEBI, and to come up with certain innovations, like the way I think RBI has come up with the innovation hubs, where we are basically coming up with lot of fraud detection models for startup to basically start with for the as a baseline, right? And then they can do their own business logic on top of it to give the right user experience. But in a similar way, SEBI should also come forward, establish an innovation hub, be at par with the technology advancement which are happening not only on the business side but also at the regulatory side. So these are all the things I would say. I think there are two important things. If the first one, which I already mentioned, the regulator also has to innovate, be at par of the state of art technologies which are the movement which is happening. At the same time, there has to have a constant collaboration between the regulator and the fintechs, so that they both should be able to understand the problem of each other, and when they both are sitting on a table, I don't think solving a problem is a challenge, and that can be easily. Yeah.
Thank you, Gaurav. So on that note, while we've so far been discussing about the domestic regulation aspect of it, I'm very sure that there are some learnings that we can take from startups globally that have successfully worked with regulators. I'm sure there are some key learnings. And I want to point my question now to Paroma, who's been a native in some sense, who's worked in the banking ecosystem within India to now leading Revolut in India to be able to look at cross-border compliances and also to be able to work with the regulator domestically. Paroma would like to know some thoughts on how or some case studies or examples that you would like to share on this topic.
Thank you, Aakarsh. First of all, are we awake?
Now they are, yeah.
Okay. No, it's quite tricky in the post-lunch session, and especially for us with the lights glaring in our faces. It looks like a dimly lit room there, and we can't make out whether folks are awake and listening or not. It's an absolute honor for me to be here at the first edition of the World Fintech Festival representing Revolut. And Revolut having successfully been present across 40 countries in the world, I have had the good fortune of witnessing how we work with regulators across all of these jurisdictions. And one thing I want to say at the outset is the level of ambition for groundbreaking innovation at scale that our own homegrown RBI has demonstrated. Hats off to them, even on the world stage. So I think we should start with a round of applause for that. Having said that, if I were to share examples of good industry and regulatory collaboration from what I've witnessed elsewhere, I'd like to take this opportunity to share 3 specific examples from 3 different regulatory jurisdictions. One, closer home from the Asia-Pacific region from Singapore, the Monetary Authority of Singapore. The second, the EEA, which governs the European Union as a jurisdiction. And last but not the least, our home jurisdiction, UK, where the FCA, or the Financial Conduct Authority of the UK, in terms of 3 examples that stand out from my experience over the last 4 years with the firm. One of the things that stood out from Mass's way of doing things, you heard Aakarsh and Ajay and others speak about the inter-regulatory sandboxing framework that we've also got in India. But one of the things that stands out for a Mass's sandbox is Asia-Pacific level data bridges. What does that mean? There is actually an inter-regulatory agreement across the regulators of Japan, Singapore, Australia, New Zealand, and the other Southeast Asian countries to allow for controlled cross-border sharing of data in a sandbox environment, which enables a lot of experimentation on cross-border payments, transactions, both for retail individuals as well as business. That's one thing I wanted to share in this forum. The second thing that stood out from the EEA, again, from the sandboxing framework itself, is they have a coaching mechanism, right? The only criteria that an institution or even an individual needs to demonstrate is GDPR awareness and adequacy to be able to be eligible to be a part of the EEA's regulatory sandbox and experimentation framework. What that means is it opens it up for a lot more different variety of companies and individuals to come and participate in financial experimentation. And there is a coaching framework, which means a formal coach is actually assigned from the regulator's side to coach a group of such experiments along the way. And it is not a zero failure approach. Over here, we have a sandbox framework where you're expected to experiment, meet certain criteria. If you do, you graduate. If you don't, you don't. It's kind of like in keeping with the current environment, your CBSE, ICSE exam types. Appear for an examination, do well, you clear, you move to the next stage of education in your life. If you don't, too bad, you have to repeat. But there is a more coaching mechanism, and 70% of the companies that have come forward for that have actually been asked to pivot in some form or the other during the sandbox stage itself to actually have the graduation rates much higher. That's the second thing that stands out for me in terms of the approach that I've seen the EEA adopt with companies. The last, coming to the UK FCA, it takes it even one step forward. There's something called a Project Innovate, which is a 5-week tech sprint that is identified jointly between regulator and an industry participant. And Revolut has been a great beneficiary of some of this, where a specific problem statement is identified jointly between the regulator and the company to go after. It may not be in keeping with existing regulations or guidelines at all. It's a problem statement which you will go after. And then somebody from the regulators department as well as that company is given a target to make that successful. So somebody from the regulator side is also carrying a target to solve that problem in conjunction with that company in a 5-week tech sprint and come up with a solution. That's a very different approach, which has driven UK to become the top financial innovator. We pride ourselves on our number 3 position, and I am absolutely proud to talk about that on the world stage. A lot of it riding on our UPI and DPI related infrastructure. But this kind of an orientation to constantly set targets and innovate with that target being set on somebody from the regulators and the industry end is something which takes collaboration to a different level altogether. So those were the 3 examples which stood out for me, which I wanted to share with this forum here. And one of the things, though, in my experience with the regulator here that stands out for us and makes it an awesome blossoming ground where Revolut wanted to come in into the Indian market is the fact that RBI is accessible, is open, and willing to rewrite its own rule book. So if they can take a leaf from some of these best case examples and learnings from elsewhere in the world and do something about innovating on that front, I think we will have an absolutely collaborative environment between industry and regulator, which would be conducive of the next wave of innovation that we're all waiting to be proud of.
Thanks, Paroma. That's very, very articulately put in terms of very interesting case studies, lots to learn from. And that's actually triggered my thought process for the second set of questions. I know we have limited time, but I want to make this more like a rapid fire where I quickly get some thoughts, some practical learning experiences when it comes to bridging innovation and regulation from each of your lens. Maybe starting with Pramod, in terms of, have there been any sort of practical, tangible learnings that you want to call out, or a case study that you feel would be, you'd like to share with the audience? And then we'll quickly take perspectives of all the other speakers.
Sure, absolutely. So, being one of the founders for the startup and also being a part of the ecosystem for more than a decade, I have seen the evolution of the way RBI has also evolved over a period of time. One thing that has been constant throughout the year is the involvement of the regulators in the fintech ecosystem, which has only evolved in a very positive direction. Back then in 2010, early 2010s, when we were actually working on the payment aggregation model, that time regulatory frameworks were also taking shape. Even then, a lot of things that we were actually building were completely based on interpretation. Then we had to do a lot of constant dialogues with the regulators to ensure that there were compliance. In fact, a lot of policy documents that we had actually drafted at that point in time were drafted from scratch because there were no templates also available. So even then, RBI was quite accessible. And the best part is they used to listen because we were together building the entire ecosystem for what we have reached today. Fast forward to today, we are having a very clear structure. There is also a lot of regulatory guidelines which are readily available. The best part is that RBI, the approach that they have taken, which is very, very complementary. Okay. So RBI has also decided that we will try to reach out to the startups and try to understand how are they looking at innovation, and then together build some solutions together. As you rightly mentioned about some of the initiatives like the Reserve Bank Innovation Hub, and then also about the sandboxes, where the startups have the opportunity to actually test their ideas. Okay, So these are some of the initiatives which I think have actually evolved over a period of time, which is only helping the ecosystem to grow from where it is right now.
Maybe question to Ajay in terms of how, in your experience, you've been able to navigate this very fine balance between, say, regulation and fintechs and collaboration. Any successful models or case studies that you want to talk about without naming, of course, but just some key learnings?
I think the most successful model I alluded to briefly, when I was earlier, is the whole payments model, right? So today, so there is the regulator built, or there was a payment layer which got built with the blessings of the regulator, and the infrastructure was open for everyone, so everyone could have used it. But there were few innovators who wanted to do some things differently, and they approached a startup bank. So we are a startup bank, right? We are the only startup bank actually in the country. And so they approached a startup bank and said, why not co-create something, on the payment space using this infrastructure. I would give a lot of credit to, the bank as well, that, they partnered with absolutely new set of founders, co-created something. And I think the beauty of the solution was it was built within the absolute confines of what is allowed regulatorily, right? So there was an infrastructure, there were guidelines, there was a fintech absolute stellar quality of innovation, and there was a bank which had to bring all of that together. I think the solution was created in a very wholesome manner, and eventually what we should today see as PhonePe, Yes Bank partnership is actually a role model partnership. But it didn't stop there. We have been fortunate to do many more such partnerships. Paytm is again an example, and Pay Nearby on AEPS. So today, because of this whole approach towards partnership within a regulatory environment, today I can actually say, I'm not sure how many of the people are aware of this fact, but 1 out of 3 digital payment transactions in the country goes through the counters of Yes Bank. And the reason it does is because of this inorganic model, not because we have the largest number of customers. It's of course, the bigger banks who have customers. But because of this partnership model, we have been fortunate enough to, handle that kind of scale of payments. And UPI itself is on the pay model, almost 55% market share, right? So all of this is purely because innovation in a regulatory environment has led to these outcomes.
Thanks, Ajay. Shibu, would you like to add anything from a bank's perspective? He's touched upon the sandbox-like environment where all the key enablers were put in place and innovation took place. Any quick learnings or case study that you want to?
I think Sandbox is a fantastic initiative, no doubt. Helps out to try out the concepts which a fintech has developed. And naturally, the regulator, bank, consumer, fintech, all are sort of co-creating, and it's a co-working space to call it lightly. But I think the current situation calls for something even more beyond that. As I mentioned earlier, that the fintech has to offering a solution not just for some particular sector or vertical in India. He has to grow. For that, he has to probably go outside India. Some cases he may be competing with multinational solutions. So how does he do that? How does he grow out of India or go out, sell his solution to markets outside India also? So what do we do for that? How do we help handhold him? This is something which we need to look at. How do you, as I mentioned earlier, how do you set up labs and such facilities, not just sandboxes, so he can test out his solutions for for a larger market, not just for India. I think that's where we should also look at, along with co-creation, hand-holding, which we have also done with. I'm happy to say that we worked with a company who, or fintech, came to us for in the beginning, he was just doing some image processing, but he did that successfully. Then we were able to build a entire video KYC solution with him. We sat together with him, hand-hold. The only problem here is that within this ecosystem, a large number of players are there. So the whole ecosystem has to gear itself to and help out all this. Otherwise, a lot of them fall by the wayside. That's where the point is. So how do we scale up our entire system so that the maximum number of players are included? That we can't focus only on Mumbai, Delhi, Chennai and Bangalore. There are a lot of tier 1, tier 2, tier 3 cities where billion people are there. How do we bring them into the fold? That's what we should look at.
Right. Thanks, Shibu. So you raised a point about cross-border in terms of having some learnings for Indian fintechs. So Revolut having expanded globally to different geographies, countries, whilst working with regulators, different mindsets, customers. Paroma, would you like to share any of your learnings for fintechs in India? As to how they can start looking at global opportunities, cross-border opportunities. What are some key learnings from your journey that fintechs in India can look at?
I think expanding globally for an Indian company is probably easier than for a global company to come into India. Because if you start with the regulatory framework, in all honesty, I think our regulator is probably one of the strictest. And to be able, if you're actually running businesses over here, successful fintech businesses in a compliant manner in keeping with the regulations over here, and you're building for scale for the kind of population over here, I think it's pretty much a cakewalk if you decide to go into other jurisdictions to cater to other customers. A few key points that I would want to share, like in India, we're used to a multi-regulatory framework, like going to the RBI for banking, payments, lending, etc. Going to SEBI for anything which is investment related. Going to IRDA for anything that is insurance related, etc. When you complied with 3 different regulators in India for somebody who's doing business across product lines, when you go out there and you meet one regulator who unifies all of this, you'll probably find it easier. And that's food for thought for us over here to see if there's some kind of a common standard that the 3 regulatory bodies can arrive at, both from companies' point of view who are engaging in that business and the regulators are conducting their due diligence, as well as on customers, where the same customer with the same KYC has to constantly keep getting re-authenticated based on the product being regulated by a different regulator. That's one aspect. Second aspect is the fleet-footedness of regulations changing in India. Based on that, Indian fintechs have built an innate adaptability or ability to change on their feet. And if you have that, again, you can keep pace with regulations pretty much anywhere else in the world. Against a backdrop of probably one regulatory change coming out a year in other countries, do you know how many fintech-related regulatory changes came out last year in India? Anybody? Take a guess if you don't know. It was actually 14. So against a backdrop of countries which bring out 1 or 2, India brought out 14. So that's the pace at which we're working here and would stand anybody in good stead. And yet again, a food for thought over here, that are all those changes really necessary, or they can be consolidated into one big change and announced, where companies can also get some sense of stability and a longer runway to run with a certain regulation before a change comes up. In the interest of time, I'll just keep it to the top 2 in my head, but there are lots, and I'm happy to discuss with anybody who wants to catch me offline.
Thanks, Paroma. So on that note, I would say all the regulators also have been working together. There's something called as the interoperable regulatory sandbox that has been set up, where we see startups across these different domains, be it lending, wealth tech, payments to insurance, etc. Nowadays, we are seeing a lot of, I would say, crossover kind of models where, there's lending against investments to insurance and so on and so forth. So given that context, as an investor, you see a lot of these startups across, and they're very fungible across different domains, regulators. How is it that you as an investor assess the regulatory readiness of any fintech, and how do you take a call on how to proceed with the startup?
Yeah, no, I think it's a very important question, right? So, whenever we are often at the cutting edge of most innovative fintech solutions that come up. For example, today, if you're building in stable coins, you know that it's cheaper to, to sort of transact in stable coins. India, if you look at the numbers, right, we do about $120 billion of remittances a year. The RBI says about 5% is what the cost of remittances into India. And stablecoin could reduce that to maybe 1 or 2%. But if you wait for that to be fully regulated, then how long will it take before you can launch that? And as an investor, if I wait for not to invest in a company because it's not fully regulated yet, then I'll probably the market exists, the technology exists, the appetite exists. If only the regulation's missing, it's always a hard question, right? Whether you should sort of back the conviction of the founder and the thesis, or should you wait for regulation? But typically, what we've done is, we engage with most of the regulators on an informal basis, and I think one of the most recently we hosted a roundtable with the Gift City regulators, right, at our office in Bangalore, and that's one of the things that's been interesting, right? Especially Gift City as a regulator has been very open to engage with the ecosystem and sort of have this open conversation. It's not about being regulated today, but it's about, are you in, what do you need to be sure of such that when the regulations come, that you're somewhat, in the right direction. And we have that example in our portfolio, right? We've got the company Slice, which was a credit card company, which tried to be as regulated as possible from the first day. Although, things worked out in a different way for the entire ecosystem. Relative to others, Slice was always the most regulated. It had the NBFC license, so on and so forth. Such that today, when an opportunity came up for a small finance bank to be acquired, Slice was one of the contenders for that acquisition, right? So it's not about looking at it's not that black and white, right? If it was that black and white, it would be easy. It's about ensuring that you are not violating the fundamental sort of principles that the regulator is going to set when regulations come about in a new industry. So that's the hard thing that, as investors we have to do. We always find very enthusiastic founders, but, ensuring that they are somewhat sort of regulatable, right, is the hard thing that we've got to do.
Sure, Joseph. So I know that, you've been reaching out and saying that we want to do more roundtables to understand the space where you bring in all these industry participants also in the presence of the regulator to be able to look at the opportunities. Quickly want to conclude this panel with the last couple of questions, maybe one for Gaurav in terms of scaling the entire BHIM 3.0. It was been an innovation by itself. I still remember 2016 where UPI came in and the first app that I used was BHIM. And since then, there's been a lot of consumer-centric innovation. So maybe want to get your quick learnings, how you've been able to do that as well.
Yeah, thanks. Thanks for asking this question. So as I mentioned before, launching this BHIM 3.0 was based on 3 core principles that we abide by. One is basically inclusivity, as you must have seen that BHIM is the only payment app we see it's available with the 20 vernacular languages, which is already present, right? But with this BHIM 3.0, we wanted to bring more and more folks to our platform. So we came up with a new set of features family mode, because the core idea was it should not be limited to a salaried urban professional, but it should also extend to a small town shopkeeper. At the same time, for a remote villager who is going to use the digital payment for the first time, be it like a smartphone or basically as a normal phone, right? So, we came up with a family mode with which you can onboard your friends and family on BHIM. At the same time, we came up with, we are the first app to come up with the UPI circle, where the breadwinner can pay, can onboard their own parents or the kids without having their account on the UPI platform with which they can make a payment, right? At the same time, we wanted to be, it should be more usable, right? So we came up with the split payments. Many of our millennial customers, basically what they do is they are in hostel, they want to, share the expenses, what they do, right? So split expenses. We also came up with a in-app budget monitoring, which is like our spend analyzer, right, as a wealth management part of it. So these are the functional things that we did, but more important was like having a great user experience at a scale. So for that, we basically digitally transformed our technology stack, which was which was old enough to to the latest platform, saving a lot of infra. At the same time, moving away from the older database to a distributed scalable database which can handle the scale. So let's suppose we were at X, so we actually had changed our infra, changed our software to make it 100x at the moment it is, right? So yeah, that's the, I would say the three core principle, like inclusivity, trust, which I already explained in the previous query, and this user experience at scale were the core thing, keeping national interest in mind. So yeah, we want to test the billions, that's all.
Thanks, Gaurav. So just to the last question on the panel today, and Mohit, if you want to add from Zerodha's perspective on top of what Gaurav has said, anything else that you see as an innovation that you're doing from a customer-centric lens?
From the customer's perspective, it's just the same problem statement that was there maybe 100 years ago. If you are investing in an asset class, be it gold, be it stocks, be it anything at all, real estate you can invest in through the exchange as well if you did not know that there are REITs. So there are like a bunch of asset classes that you can take exposure to. And across the board, the same problem that you find people encountering is the problem of fear and greed. It's a behavioral issue. And there's a bunch of regulation today that discourages a entity, be it a stockbroker, be it a investment advisor, from doing wrong by you. But some of it has to come from the entity itself. It's got to be philosophy driven. Any blind spot where the regulator isn't able to reach, maybe the regulator entity can work with the regulator and like figure that. That's what we are trying to do. That's what I think a bunch of fintechs, even in Bangalore, across the spectrum, are trying to focus on. So somebody just mentioned about looking at the principle as opposed to what's put down on the, like, I think Joseph did. So I think that stands true. You look at the overall context for which a regulation has been created, do right by it, and the letter of the law, the regulators are open to change as long as it accommodates the larger principle of doing right.
Thanks, Mohit. So beautifully concluded the thought process that more or less there is alignment, there is consensus amongst all the panelists that startups or fintechs need to work along with the regulated entities and investors to keep pace with innovation. And very interesting points made by some of the panelists that the regulator is not just keeping pace but is also setting the pace for innovation in some sense within the country with all the DPI-led initiatives and other engagements. So kudos to all the builders, the industry leaders to be able to keep this innovation going. I would have taken some questions, but I think we are a little over time. So thank you all for this opportunity and an engaged audience. Thank you once again.